Hello everyone, my name is Rini Sunny and my student ID is THI3138. I am going to give a few presentation about the overview of the listing in ASX process. I will also be covering some important topics like the process, prerequisites and pros and cons of ASX listing. To start with, why should a company list with ASX? The answer is it gives a company access to multiple investors across the world, which would give them growth opportunities to compete with others. ASX is being ranked as the top 5 exchanges globally, and it helps in raising capital when there is a need. Now let's move on to slide number 2. In slide number 2, you can see number of shareholders, free float, company size of profit test and asset test. In this, if a company has to be listed, there are certain criteria that it has to meet, such as the company should have at least 300 non-affiliated shareholders with the holdings which is valued at a minimum of AUD 2000 and a free float of at least 20%. Now, under the profit test, there is no working capital requirement if a company is seeking admission. And in the asset test, you can see the company should have at least 1.5 million Australian dollar of working capital. If not, the company should possess a capital of AUD 1.5 million within the first financial year after listing. Now next move on to slide number 3. In slide number 3, there are 7 listing processes which has been given. So in first process, it is of appointment talented advisors, and the second one is preparatory work for an IPO. Third is the beginning of marketing program. Fourth is launching prospectus with ASIC. Fifth is processing of listing application by ASX, and the sixth step is marketing, and the seventh step is trading and allocation of shares and securities. It has been given by week wise according to these 7 steps. Now next move on to slide number 4, that is the pros and cons of being listed on ASX. So the pros will be a stock option. Okay, a stock option gives the investor the right to buy or sell a stock at an agreed upon time and date, and it allows companies to raise new investment opportunities from general public. And in this, you can see the disadvantages also, like the loss of control over management, the likelihood of increased liability, and the focus on dilution of equity, and heightened and advanced requirements of reporting. So this entire process is expensive as it is time consuming, and the company has to pay due diligence on preparing the report. So now next move on to slide number 6. In slide number 6, it is the risk analysis and project evaluation. In this, if you can see the NPV, it is of, in NPV, it has been the Australian dollar of 6,140,512, because this covers the risk analysis and project evaluation. So it has calculated the NPV at a fixed cost per year of $350,000 and the variable cost of 11 per unit and the discount rate at 10%. That's why it all came as NPV 6,140,512 Australian dollar. So keeping this as the base, we have calculated the NPV against 3 cases. Now let's go on to case number 1. In this case number 1, it has been shown as unit sales, which is decreased by 10% from 350,000 to 315,000 units. As you can see, the NPV has been decreased by 10%, so it will be 5286,234. So the NPV is overall reduced by 16%. Now let's move on to next slide. That is case number 2, price per unit, which has been decreased by 10% from $22 to 1980. In this, we have decreased the price per unit as 10%, right? And so as a result, the NPV has also been reduced by approx 40%. So automatically it's been decreased. And in slide number 9, in the third case, we have decreased the variable price per unit, that is by 10%, so the NPV will be the same as that the sales has decreased by 10%. Now finally, we move on to the last slide, that is cash fixed cost per year, which is increased by 10% from 350,000 to 385,000. In this, the fixed price per unit is already 10%, you know. So the NPV is reduced by 1%. So you can see from the case 1 to case 4, the fluctuations is shown in NPV. Okay, so thank you. That's all my presentation.
Presenting our presentation in front of you for the subject finance for business. And first of all, I am Kiranjot Kaur, starting with the assignment with the introduction. is very beneficial for organization to be listed on American Australian Stock Exchange. And the next is assignment help in fact finding of Australian financial market and evaluates the correlation between the markets and the organization. And the next one is there's a brief study regarding the requirements on the financial advisory service in the country of Australia, that is also has been included. Now I'm starting with my part, that is comparison of key financial institutions. So first part is investment funds, that is the pool of funds that is collected from investors and is used to buy securities jointly. And the next is commercial banks that offer basic banking services like accepting deposits, granting loans, etc. And the third one is investment bank, that is a financial intermediary and perform lengthy and complex financial transactions. And the last one is insurance companies, that as organizations sell insurance according to needs. Now the market of operations. For market of operations for investment funds is investment, and for commercial banks is retail banking, and for investment banks it's corporate investment. And the last, that is for insurance companies, it is retail and corporate insurance. That is key business activities. For investment funds, key business activities: public offering of debts and securities and risk management. For commercial banks is accepting the deposits from general public, and for investment bank is corporate financing, and for insurance companies it's insuring individuals and firms. And now the main source of income. For investment funds, the main source of income is sales charges, commission and fees. And for commercial banks it's interest rate on loans, and for investment banks it's commission on trend and trading securities. And the last, that is insurance companies. For this, the key financial institution is insurance premium. Is of examples of four financial institutions. The first, for investment funds, the example is Australian Ethical Investment Limited, and for commercial banks it's Westpac Financial Westpac Banking Companies Corporations. And for investment banks it's National Australia Bank, and for insurance companies it's Allianz Australian Insurance. Now I am forwarding my presentation to my friend Akashpreet. Now he is starting with the further report.